Welcome to Drill Down Earnings. We have second quarter results from Twilio. They're right across the street. I probably could have just asked them what was going on. They keep things staying close to the vest. I'm Cory Johnson, the Chief Market Strategist for the Futurum Group. We've got the business story behind one stock on a move. This stock is moving, finally, in the right direction. At least for people who are along the stock. Second quarter earnings were a beat and a miss to Wall Street, and a beat, and Wall Street stopped paying attention. We did not. We were looking a little more into the quarter. What we see here is a little over $1 billion in revenue, a 4% increase, 7% organic. That means stripping out acquisitions and maybe more importantly, some businesses that they got rid of. But 7% organic growth, 4% overall growth in the real numbers here for this business. And profits, again, stripping out some results, some costs related to some getting rid of some businesses, laying off some people. Look, it's been ugly over there. But things are starting to get better, or at least level out, it looks like it. $577 million in non-GAAP gross profit and $175 million in non-GAAP income from operations. I don't like non-GAAP. Let's go to some actual numbers. Free cash flow, almost $200 million in free cash flow. Free cash flow for this business at an 18% free cash flow margin, really steady high free cash flow margins. You can see the effects perhaps of a CEO, and the now CEO, a former GE guy running this thing for free cash flow. And so when we dug into the numbers, they talked a lot about different customer use cases for this messaging platform, both email and text messaging. They talked about how political business is not really strong for them, or not a real mover of the needle for them in this year, when it might have been in the past for Twilio. But their customer growth here, it's not strong. It's only 4%, same growth as revenues, but it looks like it's steadied out, like the falling nature of customer growth, that it was once well into the double digits, now it's single digits, but kind of holding at 4%. Also, their net dollar expansion rate, how much they're expanding within the customers they got, of 102%. Not great, but not below 100%. The customers aren't shrinking, and that's good. And it was kind of an interesting quarter. And I think after so many bad quarters for Twilio, stock market liked what it saw. This bid the stock up at after hours trading 7% after losing 20% in the last year. So have things steadied out? Are things getting better for Twilio? Seems like there's maybe out of crisis here. We'll see if they've cut too deep or not. It's always a question when you make so many cuts. Khozema Shipchandler, the CEO, with that wonderful name, Khozema Shipchandler, come on, it's a great name. But he talked about the cutting that they did and some minor technology tweaks that they think puts them in a better position to respond to customers when he was asked specifically if they'd cut too much.
In terms of, some of the rationale behind what we did at the time and what we were kind of expecting going forward, like we did want to orient many more of our customers towards self-serve. And I think, we pointed to a couple things in the quarter around self-serve, like it was definitely one of the better quarters for that kind of cohort segment or of customers. It's a very, very kind of broad set. Like you could have customers spending small amounts of money up to, kind of decently large size amounts of money. And so it's a kind of broad category that has seen strength. There's a number of things that we did from a technology perspective as well to make sure that we were able to on-ramp customers in a way that they could kind of activate with Twilio fairly quickly as well.
So Twilio activated, we shall see. It could be good times for this company in the near future. That's certainly what they hope across the street. I'm going to give you one number to remember about these results that really sums up everything that's going on with Twilio, I think. Our drill down earnings bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, so just reported second quarter earnings from Twilio. This company has been in a world of hurt, so maybe the bleeding has stopped. 1.08 billion in revenues, 7% organically, a lot of free cash flow from this business, but maybe the most important number, the drill down bite, the number that tells you a whole lot, is 4%. That's the revenue growth rate. It's not fantastic, but it doesn't seem to be getting any worse, and not getting worse is getting better for Twilio. All right, thanks for listening. I'm Cory Johnson. This has been the Drill Down Earnings Report, part of 6.5 Media. course, you can check me out on X at Cory TV, on TikTok and Instagram at Drill Down Pod, and check out all of the other earnings reports and so much more right here on the 6.5 Media YouTube page.